I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the June 2024 meeting. At its latest meeting, the FOMC chose to leave the target Fed funds range unchanged at a level of 5.25 to 5.5%, and they also maintained the rate and reserve balances at a level of 5.4%. The decision was a unanimous one and was expected by the marketplace. The post-meeting statement was mostly the same. Removed from the statement was a description of the changes regarding the balance sheet reduction as those changes start this month. The other difference was that progress towards the committee's inflation goal was described as modest rather than a lack of. This is a slight change, but is at least a start, as the committee's test for cutting rates is to gain confidence inflation is moving sustainably to its 2% long-run goal. June is also a month where we receive an update to the Fed's Summary of Economic Projections, or SEP. The dot plot concerning rate projections showed one cut for 2024 versus 3 at the March meeting. However, 2025 now has 4 cuts rather than the 3 projected at the March meeting. Concerning 2024, the projections have coalesced, with 8 members projecting 2 cuts, 7 projecting 1 cut, and 4 projecting no cuts. We'll see if Chair Powell gave us any additional information about future interest rate strategy in his press conference after the break.
Good news, everyone! Vizo Financial's annual hot dog eating contest is back. Join us on July 18th as we support the wonderful work of Children's Miracle Network hospitals at Penn State Health Children's Hospital. Alright, here's the 411 on how you can get involved. Compete, sponsor, and watch. Compete by applying online at vfccu.org. Sponsor by registering on our website. And of course, watch. The 11th annual Vizo Financial Hot Dog Eating Contest will be streamed live on July 18th at 3:30 p.m. It's gonna be awesome! This hot dog eating contest gets bigger every year, and with your support, this will be the greatest one yet. In fact, we think it's gonna be all that and a bunch of hot dogs. See you there, homies!
Welcome back. Chair Powell started the press conference with his prepared remarks. He said that economic activity has continued to expand at a solid pace, that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated, and that inflation data received earlier in the year were higher than expected, but more recent readings have eased somewhat and inflation expectations appear to remain well anchored. He indicated that although the recent inflation readings show modest further progress, the committee will need to see more good data to bolster confidence that inflation is moving sustainably to 2%. In the Q&A session, Chair Powell answered a number of questions about the projections in the SEP. As for the dot plot concerning 2024, he said that 15 of 19 dots showed 1 or 2 rate cuts, of which he felt both were plausible. He mentioned that though the number of cuts were decreased for this year, one was moved into next year, so that just represents a timing change. He said the main driver of the projection for fewer cuts this year was the increase in the inflation forecast given the data earlier in the year. He reminded the group that the dots are a point-in-time assessment and not a plan. In response to a question that if 3 months of data were enough to convince the committee that inflation was sticky, would 3 months of good data be enough to cut rates? He said they do not think about it that way because they are considering the totality of data. When asked what impact he thought a 25 basis point cut this year would have in the economy, he said the Fed is not looking at it that way. He explained the Fed is considering a rate path rather than a single move, and the first move on that path is a consequential point for the economy. Concerning the labor market, he said conditions are in a better balance, but deterioration can happen quickly, and if they see weakening more than they expect, that could cause them to act. Overall, he said the economy is in a good place, and the household sector is still in good shape, but the committee is aware there are signs that financial pressures are increasing for lower-income Americans. Well, I don't think there's a whole lot new here, particularly for those that follow the Fed. Fed members have been talking for some time about higher rates for longer and fewer cuts this year, so it should be no surprise that the dot plot adjusted accordingly. It should also not be a surprise that Chair Powell is non-committal on the timing of the first rate decrease, only saying that when confidence is achieved through a totality of the data that inflation is moving sustainably down to 2%, they will cut rates. He has been saying that for some time, and it's not likely to change. That's the FOMC update for June. Thanks for watching, and be well.